All right, welcome to The Explainer. Today, we are talking about the perfect storm that's absolutely raging in the silver market. You see, after what can only be described as a record-shattering 2025, this metal is in a whole new league. We're going to break down exactly what's behind this massive rally and what the experts are saying is coming next in 2026. So let's get right into it. Okay, so first things first, we need to get a handle on what just happened. The price action we saw in silver last year, yeah, that wasn't just some little rally. It was a complete, fundamental repricing of the metal that, honestly, it caught even the most seasoned analysts totally off guard. And this number, well, it really says it all. A plus 147% surge in 2025. I mean, think about that. This wasn't just a good year. No. This was a breakout move of historic proportions. It completely shattered a price ceiling that had been in place for over a decade and screamed to the market that the old rules, they just don't apply anymore. And just to put that gain into perspective for you, silver's performance didn't just beat other investments. It left pretty much everything else in the dust. We're talking gold, stocks, you name it. It wasn't just a win, it was a total knockout that forced everyone on Wall Street to sit up and pay very close attention. Which brings us right to the big question, the one we're here to answer. How on earth did silver, the metal people often called gold's forgotten little cousin, suddenly become one of the hottest, most talked about commodities on the entire planet? Well, the answer is pretty fascinating. It's all about a powerful convergence of forces. So to really get what's going on here, you have to understand silver's unique dual identity. It's kind of like it has two very different jobs at the same time. And the key thing right now is that both of its engines, they are firing on all cylinders. And here's the absolute crux of it. Silver acts as both a monetary metal, just like gold, and as a critical, irreplaceable industrial metal. So on one side, you have investors piling into it as a safe haven, a hedge against inflation and all the geopolitical craziness in the world. And then on the other side, the world's most advanced high-tech industries literally cannot function without it. It's being pulled in two powerful directions at once. In this chart, wow, it just brilliantly illustrates how dominant that industrial side has become. Look at that, roughly 58% of all silver demand now comes from industrial applications. Let that sink in. This isn't just a shiny precious metal anymore. It's a strategic, mission-critical resource for the entire modern economy. And listen, this demand isn't coming from some old-school smokestack industries. No way. It's being driven by the most explosive, cutting-edge growth sectors on the planet. I'm talking about the green energy transition, which is literally built with silver in every solar panel. The EV revolution? It needs silver in every single vehicle. And the AI boom? You guessed it. It needs tons of silver for data centers and high-performance computing. It's everywhere. But here's the kicker. At the exact same time all this industrial demand is exploding, that traditional monetary engine is just roaring back to life. You've got investors desperate for a safe haven from currency debasement and runaway inflation. You have a weakening dollar, which makes silver cheaper for the rest of the world. And on top of all that, you have central banks quietly accelerating their move away from the dollar, trying to get their hands on tangible assets like, well, silver. But look, this insane dual-engine demand story, it's only half of the equation. To get the full picture, you have to look at the other side, supply. And believe me, that's where this story gets really interesting. Get this. For 5 straight years, the world has been using more silver than it mines. This isn't a blip on the radar. It's a deep structural imbalance. And every single year, that deficit just keeps eating away at the world's stockpiles. So you might be thinking, well, why can't the miners just dig up more? But here's the problem. The most crucial point to understand about silver supply is that around 70% of it isn't mined on purpose. It's just a byproduct of mining for other metals like copper, lead, and zinc. That means even when silver prices go through the roof, it doesn't automatically mean we get more silver supply. You combine that with years of stagnant mine production and inventories in the big vaults in London and New York getting thinner and thinner, and you've got a serious squeeze. And this chart right here gives you a really clear visual of that shortfall we're talking about. Look at it. Year after year after year, the world is in the red, burning through hundreds of millions of ounces more than it can produce. This deficit, this is the fundamental concrete floor that's supporting prices way, way above where they used to be. Okay, so we've got demand soaring and supply getting squeezed tighter and tighter. So how do the pros gauge if silver is cheap or expensive right now? Well, one of the most watched metrics in the entire precious metals world is something called the gold to silver ratio. It's actually a really simple concept. It just tells you how many ounces of silver it takes to buy 1 single ounce of gold. So when that ratio is really high, it means silver is considered cheap or undervalued compared to gold. But when the ratio starts to fall, that's the signal that silver is gaining strength and outperforming. And this is where looking back at history becomes absolutely critical. Right now, the ratio is hovering around 59-1. But as you can see, in past major bull markets for silver, that ratio has compressed dramatically. We're talking down to 32-1 back in 2011, and get this, an insane low of 14-1 in 1980. This historical data is exactly why so many analysts look at silver today and believe it still has massive upside potential. Which, of course, brings us to the future. With this incredibly powerful setup in place, what are the big financial institutions, the big players, forecasting for silver prices as we head through 2026? Well, the forecasts are pretty much all bullish, but they definitely vary on just how bullish they are. You've got Goldman Sachs, for example, seeing silver in that $85 to $100 range. Citi is targeting $110, and they're pointing directly to physical shortages. And then you have Bank of America. They have this incredibly ambitious target anywhere from $135 all the way up to $309, and that's based on the idea of that gold to silver ratio snapping back towards its historic lows. I mean, wow. Now, of course, no investment is a one-way street. We have to be realistic and look at the potential headwinds. For one, silver is famously volatile, so sharp, scary pullbacks are always on the table. A surprise global recession could obviously hit industrial demand pretty hard. And, when prices get this high, you start to see manufacturers try to use less silver in their products. That's a process they call thrifting. We always have to keep that in mind. And finally, it's really important to understand how silver tends to move with other key commodities. It often acts like a high beta, or kind of a leveraged version of gold. So when gold is in a bull market, silver tends to outperform it, sometimes by a lot. And what's really interesting now is that it's moving more and more in lockstep with copper, because they're both seen as these essential green metals needed for electrification. All right, so when you step back and put all these pieces together, you've got the dual engine demand, the structural supply deficit, the shifting macro environment. What does it all really mean? I think the key takeaway, the big picture here is this. Silver's entire role in the world is going through a fundamental, once-in-a-generation transformation. It's evolved from just being a simple precious metal to becoming a truly strategic mineral that is absolutely positively essential for building the future green and digital economy. And that leaves us with one final crucial question. Are we just witnessing a short-term speculative bubble, something fueled by market hype that's going to pop? Or are we in the very early innings of a new commodity supercycle, a true structural revaluation driven by these powerful, undeniable forces of technology and economics? That, my friends, is the multi-$100 billion question for 2026 and beyond.